Russia raised interest rates last week by 100 basis points. It didn't help stop the bleeding. And then, of course, we had this second massive interest rate hike, and that still doesn't seem to be helping. So where do things stand?
Well, it's interesting that the attempt to stabilize the situation with this shock and awe 6% rise in interest rates has done the opposite. It's created panic. Everyone rushing to the foreign exchange door to try and convert rubles into anything harder, euros and US dollars. So it really hasn't worked. And fundamentally, the central bank can't control the oil price, and that's what's really undermining the ruble.
Now, does the value of the ruble largely depend on oil prices?
I think more or less it does. I mean, you can track it. They more or less move in tandem. There's very little else that the Russians can do except smooth the process out and put the brake on, if you like. But they've been trying that, and they've been losing their foreign exchange reserves trying to defend the ruble. So they've given up on that. Now they've tried the other lever, which is raising interest rates. And of course, that's double-edged. Raising interest rates so dramatically hurts your domestic economy. And so we enter deeper recession next year. And that hasn't seemed to work either. So really, it's created more panic. And anyone who's got rubles now wants to try and convert into dollars, which makes the situation even worse for a forwarding currency.
And Jan, tell us the impact of the interest rate hike beyond the Russian border, especially for American companies.
Well, I mean, it has a global impact. We've seen that, in Western markets, there's been a flight to safety, safe havens. So it's German government debt, US government debt. There's the gold's gone up as well. So it's all risk aversion. The consequences of how this Russian drama will play out will have an impact on the rest of the world. And for the time being, money is being put into safer parking places until the fog clears. We have to watch the Russian situation, and it could still yet get worse. We know that with a much weaker ruble, all those banks and companies and households with hard currency debt will find it a lot more difficult to service, particularly if their earnings are in rubles. So we might see, banks beginning to topple, and the central bank will have more on its plate trying to stabilize some of its banks. So that will be the next stage to look out for.
Well, where does this leave Russian President Vladimir Putin? I mean, what tools does he have at his disposal to help the situation, if any?
Well, it's a difficult one. I mean, many people are saying, well, the only option now is capital controls. He's already said that he wants to punish the speculators. These are the people who have wealth in Russia but simply want to convert into hard currency to protect their wealth and portfolios. That's a second round effect after we've had a falling currency. So he's trying to put off the speculators. So you might have capital controls light. In other words, only legitimate trades and pre-existing debt service where it's allowed, outside sanctions, is made. In other words, there'll be restrictions on free conversion of rubles into harder currencies. That's capital controls light, but they're very loath to put in capital controls because the whole globalization of Russia since the Yeltsin years will be put up in the air and will make investment in Russia even more precarious.
And what about for the Russian-Ukrainian crisis? What does this mean for that conflict? Is Russia less powerful?
Well, it's a regional power. I mean, it has large foreign exchange reserves, which have built up in the fat years of the boom when oil prices were riding high, but now they're suffering again. But this is a rerun. They've been compared with 2009 after our own financial crisis and global recession. So they've been through this before, and they came out fairly well, although never really properly recovered. It really is now political. Ultimately, I think the West has to offer some carrots as well as the sticks on sanctions, a get-out, an exit for Putin. I don't know what that could look like. It could mean a grander free trade deal of some sort, or some measures to stabilize the situation in the Ukraine. If we have a de-escalation in Ukraine, I think things would start to look a lot better for Russia.
And for U.S. investors, what should they be looking at more broadly?
Well, Russia is not a significant market for the US. It is much more important for the likes of Germany, but not that important. The impact of Russia really is geopolitical risk. So we have this seesaw risk aversion and risk appetite. It is linked to the dramas of the Ukraine and Russia and will continue to be linked. So it's always there in terms of a risk aversion, risk on, risk off. And it's not really a drama that's going to resolve itself until we actually have a political solution, first of all, in the Ukraine, and secondly, more widely between the West and Russia. As we know, the relationships are at a new low after the end of the Cold War.
All right, Jan, thanks for joining us. We appreciate it.
Thank you.
For TheStreet, I'm Scott Gamm in New York.